Hello guys, welcome back to our channel. I'm Kenya with BK Trading Academy. I'm one of the educators and owners along with my husband Brian Horton. And in today's video, I'm going to be walking you through how to find a setup using the price action channel strategy. So if you are inside of our Telegram, we have started sharing more of this strategy. A lot of our students currently use it. We've had amazing success with it. And we now want to start teaching you all, especially those who are new or struggling. And maybe it's hard for you to identify a trading system that works for you. We like this particular strategy because it simplifies the price action. It makes it really easy for entries, exits, and just knowing where to place your stop. It's very, very clear and you don't have to put a lot of thought into it. So we're going to delve deep into it. You're going to notice that there's a playlist for this particular strategy and we actually have a content training manual in process for it right now. So let's go ahead and hop in. Before we do me a favor and smash that like button. Make sure that you're subscribed and that you turn on the notifications list so that you don't miss the next video. And let's go ahead and hop right in. All right, guys, let's go ahead and hop in. So we're going to start on the monthly time frame of USD Chef. And the reason why I want to start on the monthly time frame is just to kind of get a good overall feel of what is going on in the market. So one of the things that I do see here is that if we just kind of bring our chart together, this market has been in a decline for a few years. We've actually been moving sideways now, so you'll see that. So notice here that we are quite sideways on the monthly. And I believe that we are positioning for some type of trend reversal, breakout to the upside or downside. And I do believe that the dollar is going to gain strength. So I believe that we're going to continue to go upward. We're going to see the price grow. But notice this here. So we've been in a downtrend for some time on the monthly. And if we just look left, the price has never been this low. So this is our 2000 and let's see when this was. This is 2001. So this is our 2001 low. And the market has climbed ever since and just been moving sideways. Okay. So considering that, that kind of just gives me an idea of how I want to approach the market. You know, how do I want to add this critical piece of information to my overall view of what I'm seeing? So the reason why I'm doing all of this is that I want to build a comfortable bias of how I should approach the market. Should I be buying or should I be selling? And what I'm going to do is keep that view in my mind. And now I'm going to go ahead and work my way down. So if I know that on the monthly, let's just kind of make this a little bit bigger really quickly. So on the monthly, I'm definitely going to be paying attention to my monthly low and also my monthly high. So I do see a little pattern right here on the monthly. I love paying attention to patterns. So I see a double top here and notice how we had a bearish engulfing candle and we have the neckline of the pattern. Notice how price broke below the neckline and then came back to retest it and continue to move lower. So what could also happen is that since this is quite bearish and we're still bearish on the monthly and moving sideways, I think that this price could move lower to complete this double top pattern and retest this support again. That's one thing that can happen. So now hopefully this gives you an idea of why the higher time frames are important, because you want to build some type of picture as to what can happen. What are all the possible scenarios that can happen? So that way, if you enter a trade and price goes against you, you kind of understand what's going on and what's happening. Okay. So I'm going to keep that in my mind. That's one scenario that can happen. Now, it also depends on how long you're trading for, because if I'm scalping, it's good to know this information, but I don't have to worry about, price reaching way down here because price is currently at 92.67. So that's really far from 87.85, right? But that gives me a picture of what's going on. So now I'm going to continue to drill lower. I do like that this monthly low sticks out to my naked eye. So I'm definitely going to keep that in mind. And one thing I also see is that this is our consistent monthly high for about the fourth month in a row. It was also the neckline of our double top pattern here where the market came and provided a rejection to the upside. And then it came back, broke through the level, came back and retested it. So that's a pretty important level. And I think I need to keep my eye on that. So now I'm going to drill lower and now I'm on the weekly time frame. And now you can see that we are bearish on the weekly. And now you can see that double top a little bit more clearly, right? So here's your double top here, and here's your neckline. And here's where price broke that neckline. Notice that this was very strong resistance also in the past. So that neckline has been broken. We came back to retest it and price has continued lower. Now, what I'm also seeing is a double bottom right here, right? So I'm seeing a double bottom. We have very strong rejection. We also have some very strong support here where the market moved sideways before. before continuing higher. So that tells me that, you know what, we could see a similar pattern repeated here as buying pressure continues to come in. We could see some type of reversal here where the market might go right back up. And if we pay attention to fundamentals, for example, I'm going to go over to Forex Factory. So this is a economic calendar. You can pull up any economic calendar you want, but you definitely need to be combining fundamentals with technicals. So a fundamental analysis is when you're looking at key economic indicators around the world of what can impact your trade. So if you're trading USD, for example, you want to know what's going on with the USD currency. When is there high impact news? And what you'll notice here is Wednesday, March 22nd, we have the FOMC funds rate and also economic projections. So that's where they talk about increasing or decreasing interest rates. Okay, so when we look at this, you'll see that right here, it says our previous report, we came in at 4.75%. And now we're expecting a 0.25% hike. Okay, so if that happens, that's going to push the USD dollar higher. And that means that on this chart, on this USD chef chart, we are going to see if that rate does increase and it comes in higher than the actual forecast, we will possibly see the dollar move up. Okay. So that's really good information for me to know, because if I'm trading, especially from critical levels like this low here, that can position me really well for a trade this coming Wednesday. Now, what I can do is either sit out of this trade until the news actually happens, and then I can trade the post report, or what I can do is, it just depends on your style and how you like to trade news. If you're scared of trading news, I recommend you sit aside, don't trade, wait until the news is over, and then come in and kind of find your opportunity there. I'm not really scared of the news, to be honest. When I look at a chart, if I'm trading from very key significant levels, such as a level like this, or like this, or like this, or like this, news doesn't really concern me, because I know that I can come out of that trade positive, especially if I can kind of read the projections and feel comfortable with what's going to happen. I can set a comfortable stop loss, or I just kind of know where my advantage is. And as you trade over time, you'll learn that as well too. So looking at this now, and we're asking ourselves, how should we position ourselves for this trade? Well, if you use the price action channel strategy, you're simply going to identify your trends. So if we were swing trading, right, we know that we are in a downtrend. And what I like to do, you want to basically connect your swing highs. So in a downtrend, you want to connect your swing highs. So you want to have at least 2 or 3 touches or more, preferably at least 2 touches on each side. So I'm going to go ahead and clone that. Now, you won't always have a perfect channel. Sometimes the price is still playing out. We're still waiting for price to create a new swing low or swing high. But as you can see here, I simply just clone that, and now I bring it to the other side. So with channels, you're basically trapping the price action, and it helps to make things a bit more clear, actually a lot more clear, and it helps to identify your ideal entries and exits. So now you can see, for example, now that I have this price captured in a channel, this is a descending channel because the price is moving downward. But one thing we know here is that we have a strong support where the price is rejecting, right? And if I expect a strong dollar this week due to the news, I'm expecting that we possibly could see this price break out of the channel. So right now, you'll notice there's not much happening with USD Chef, and you'll notice a lot of that happens before news. But what I'm going to just go ahead and do is I'm going to go ahead and I'm going to find my levels. So I have a support level that's pretty strong, and I'm going to find a resistance level. So I'm interested in this resistance level because it's above the current price. So you want to find a level above price and a level below price. If you have a downtrend, for example, you want to be looking for opportunities to sell. So since my trend is downward on the weekly, I'm going to be looking for an opportunity to sell. This is an opportunity that I would have taken when the market came here to retest. So notice when we rejected here, we had a bullish breakout and the market came here and retested this previous low, previous high, and previous high. Okay, so if you look within this area, this is a zone that the market has respected as both a very strong level of resistance and also support as well. It also aligned with our trend line resistance. We got wick rejection in the zone, which is a confirmation for the channel strategy. So let's run through the entry criteria. You need a channel. So if you have a channel where you can connect your highs and your lows, at least 2 touches on each side, you have a channel, okay? Now remember, in order to have a valid trend, you need 3 touches off of your trend line. If you have just a trend line with 2 touches, you have a trend, but not a valid trend. That's how we define it. All right, so now that we have our descending channel, we want to find our level. So we found our levels. You can see that I've highlighted that with the actual rectangular horizontal zone, and we have our level. So the next thing we want to do is we want to find our entry. So let's say, for example, I'm just going to remove this area here. So let's do a replay, and we're just going to get rid of this part right here. Okay. All right. So now look at that. So this is how we would have prepared for this trade. So simply what I would have done is I would have set an alert right at this level. Now, why am I setting it here? I know that we are in a downtrend. I know that we are correcting from an area of support. So if I would have bought here near the bottom of our trend line, I would have taken profit at the middle of the channel, because that's how we trade channels. You look to take profit near the middle of the channel. And sometimes you might even get more pip count depending on the direction if you're trading with the overall trend. But typically we take profit in the middle of the channel, whether you are swing trading, position trading, scalp, or intraday trading, okay? But now you can see that as the price continued upward, it moved into our target zone. So when you are selling, you want to sell at a lower high, not at a lower low, not at support. You don't want to sell at support. You want to sell at a lower high. So this previous resistance, we expected a retest in this area because this is where the market provided a rejection to us previously. It shifted to the downside. The market came here previously in the same area. It made a rejection to the upside, and then we can continue to scroll over like we just did on the higher time frame. So this is why we want to target this zone. We want to wait for the price to come here, and we want to see how is it going to react in this zone. So the very next thing that you would do is you would set an alert. So notice the price hasn't gotten there yet, right? And if you're trying to pinpoint your entry, you're thinking, well, where should I enter? So you're going to put an alert right here at, I would say, 9,400, because we want to be notified before the price gets there. So what you would do is, I can't do an alert right now because I'm in replay mode on TradingView, but you would set an alert, and then you're going to wait for price to get there. So 90% of trading is waiting for price to reach your actual target execution zone, okay? And then 10% is just your trades playing out. 90% is us waiting and being patient. So once the price gets there, you're then going to look for your entry confirmation. Do you have a channel? Yes, you have a descending channel with at least, you have 1 touch right now. So we're looking for hopefully 2 touches to come close to this trend line and reject off of that level. We want to see that price gets to our level that we are looking to execute for a short, and we want to see some type of rejection. So wick rejection, we can even continue to drill down and we can find a double top, for example, on the 4-hour, or we can look for 4-hour confirmation. You will find your style, but basically you want to be able to target this area right here. So that's what we're doing. So what I'm going to do is I'm going to mark this area here as my resistance. And this is if we were planning for the trade before it even happened, right? Okay. And now I'm going to go ahead and put my support. So this is my support. And if I'm looking at, okay, if I execute here, I have to plan out my stop loss. So if I'm on the weekly, I want to look at what is my potential profit. So if I short here and the market comes back to about the middle of the channel, that's 187 pips. So I'm like, okay, that's pretty good for a swing. So now what I can do is measure from my entry. So I'm just going to put the price action, or actually we use a 50 period moving average for confluence. Our confluence that we use, extra confirmation for channel strategy, is that if we are going to sell, price needs to be under the 50 period moving average. So notice price came within this zone. When the price gets here, you want to see some type of wick rejection in the zone. Notice we got a double wick rejection in the zone. So the price started dropping and then came back up, retested near the wick area, and continued to sell off. So had you sold from that zone and you took profit in the middle of the zone, you would have hit your profit target of 187 pips. Now, when the price moves outside of the channel, that is considered possibly that our trade is becoming invalid. That means our rules are no longer valid. So what I could do is measure from that wick or from that area where price started to reject and say, okay, if I'm going to make potentially 187 pips, what am I comfortable with in terms of a stop loss? So with swing, I like to use larger stops and spread out my lot size, or allows me a lot of advantages in the market. And I have just found that I'm able to come out on the winning side despite what happens, even in drawdown. So I'm going to look at this and I'm going to say, okay, what is enough room for me to enter this trade? How much breathing room do I need to give this trade? Is it a pair that wicks aggressively like GBP pairs? Do I need to allow some extra room so that I don't get prematurely wicked out? If not, then I probably would use a little smaller stop loss than I normally would with like a GBP pair, right? So notice right about here, that's about, I would say 65, 66 pips or so. I feel that, you know what, this is probably enough room for me to be able to do what I need to do. But one of the things I also like to plan for is the possibility of fake breakouts. So often with channels, you have to be prepared that the price might break out of the channel and then it potentially turns around, because this is a very obvious area here. So let's say if the price broke out of the channel and it wicked, and notice that back in, when was this? November of 2022, it also wicked in this area, it wicked in this area, it wicked in this area, and it wicked in this area. So I'm always looking at, you know what, price is still under the 50-period moving average. If it wicked in these areas previously, it just could wick off of that area again. So what you could do is keep your stop loss very conservative and put it like maybe 45 pips outside of the channel on this type of setup. Or you can say, you know what, if it breaks out of the channel and just so happens to wick in this area, I'm going to add another position here, and then I'm going to put my stop loss above the 50-period moving average. So that's how I also like to use the 50-period moving average, is that I can put my stop loss above it or beneath it, depending on if I'm buying or selling. So that's another way you can use it. But as you can see, this trade would have went your way. The stop loss part is very easy, in my opinion, with this strategy, because you either can set it outside of the channel or you set it above or beneath the 50-period moving average. It's just that simple. And you're always taking profit in the middle of the channel. Now, I'm only going through a swing scenario right now because I feel like it's so easy, especially trading the higher time frames. The price action is a lot more clear. But one of the things I want you guys to get used to seeing is when you see a setup and you're thinking, oh, I'm going to short here, which you can see it did go our way, but you also need to be able to see signs of a trend possibly reversing. So I want you to pay attention to how, for example, this is a very strong demand area, in my opinion, where buying pressure can come in. We noticed on the monthly how this price action is quite sideways, right, when we scrunch our chart together. But overall, this gives us a picture of what could possibly happen. We know that we could dip lower, but right now it seems like we actually are positioned to move higher. And if we know that USD is planning to, or the dollar is planning to increase interest rates this week, then that's going to give us a stronger dollar as well. So you want to be, you know, over time, you'll get this. When you're a new trader, it's very overwhelming. It's a lot of information to know. And I want you to know that eventually it's going to all make sense. So don't panic. Don't be scared of the charts. Allow yourself time to develop and everything will all come together. So I just wanted to run through this scenario of how do you start from the very beginning, approaching a trade on the longer time frame, such as a swing trade, for example, and going through the entry criteria to let you see how you would plan your entry, your target, your stop loss, and simply executing. And what do you look for once price gets to your target price zone or area of interest? So guys, I hope that this was helpful. What I recommend is play this video over and over and over again, especially for those of you who are using the price action channel strategy. And we drop trade ideas on this strategy just about every day, guiding you on entry, stop loss, target, letting you know when setups occur. And we also will provide signals on this strategy as well too. So I hope that you enjoyed this video. Make sure that you give it a like and also comment below. Let me know what resonated with you or what you'd like to see more of with this strategy. I look forward to seeing you in the next training, and thank you guys for watching.